All right. Good morning, traders. Happy Saturday, March the 21st, 2006. My name's Melissa. For those of you who might be new to the channel, welcome. Every Saturday we get together, go over potential swing trade setups that I am watching, and just talk about the overall market. I hope y'all had a good week last week trading the market in the SPX and Trendy room at Simpler Trading, where I trade live every day with my trading partner, Trendy John. We had good weeks in those rooms, mainly day trading. So my focus has been day trading pretty much for all of 2026. I've had some swing trades, some winners, a couple of losers, but overall, I'm very profitable on the year. Proud to say that. And I hope that you are navigating the market in the green as well. If you're not, stick around. I believe that trading supply and demand is the answer to help you know where big money is looking to buy and sell. And that is what my trading is based off of. So, let's get started. Before I do, if you don't mind, take a moment, hit the like button. It helps me out and it's free for you to do. So if you would hit the like button, make sure you're subscribed to the channel. I would appreciate it. Every week, I take a look at coifin.com. I go to US sectors. I put in the sectors that I want to know how they are trading for the year, for the quarter, for the month, and last week. Then I write down on my sticky note here the names that are the sectors in the market that are outperforming the overall market. That gives me a bullish watch list because I want to focus on the names that are overachieving, so to speak, to the upside. Now, I will say we have come into some higher time frame demand zones that I was looking for since December of last year. The market was extended and it just felt like we were going to see some pullback into this first quarter, and that's what's happened. So if you watched any of my videos at the end of December, beginning of January, I talked a lot about this, and it has come to pass. And so now that price is getting closer to some bigger zones, some higher time frame demand zones, I am not cautious. Well, yeah, a little cautious about the more defensive areas of the market that might been outperforming at the beginning of the year. You could see some rollover back into the tech names and things like that. I don't think we are completely there yet. So we will talk a little bit more about that in a minute. But let's first, I just want to go over quickly what I mean by COIFIN and how I use it to determine my bullish watch list for swing trades. I'm looking back over the last year, and I noticed that gold miners, metals and mining, semiconductors, oil services, and oil and gas exploration, those are the top names over the last year. They are up anywhere from 78% to 36%. Okay, then I go back and I look at the last quarter, and look, here's the reality. Over the last 3 months, basically from January 1st until the end of March, It's all been about energy, oil, and gas, a lot having to do with the geopolitical stuff that's going on right now. Those areas of the market have surged since January 1. Here is XLE, the energy sector. What its chart looks like from January 1 to yesterday, that thing is on absolute fire. So up 32% this quarter. Here is oil services up 36% this quarter, and oil and gas exploration up over 40% this quarter. That is huge spikes, my friends. I have names on my bullish watch list for potential pullback buys in these areas. Other than that, looking back over the last quarter, semiconductors, they are positive for the last quarter, and that's actually saying more than what you realize because things like consumer discretionary and financials and communications and big tech and healthcare and even gold miners, they're all negative for the quarter. So anything above this zero line is positive for the quarter, but everything below here is negative for the quarter. So, yeah, semiconductors, though, still, when you're thinking about the big tech names, semiconductors are the relative outperformer in that area so far this year and this quarter. Month to date, all of March, or looking back over the last month, either way, they're going to be about the same. The areas that are leading the way is the same that I've already mentioned: your energy, your oils, your gas names, and then utilities, communications rounds out the top five there. Then over the last 5 days, you're going to see the same: energy, oil, gas, then financials, and the airlines sector, the top five. So we have a little bit of concentration on oil, energy, gas, that sort of thing. And we got a sprinkle of some semiconductor relative strength. We got a sprinkle of some consumer staples, which would be more defensive minded market, some utility. And so my list is mainly going to be those things. Now you might ask, okay, we've been really, really pulling back in the market. What about the downside and trading things to the downside? I absolutely have been doing that this year. 100% I've been doing that this year. As a matter of fact, looking over TradesViz and looking at the trades that I've had on this year, I only trade calls and puts. I don't trade spreads. So my look back is pretty simple in that I have bought more puts than I have calls this year. So, am I trading the downside? Yes, 100% without a doubt. I am trading the downside. But saying that, I tend to trade the indexes or SPX or XSP. I use that as the vehicle to go short, and I'm typically doing that through day trading or shorter term 2 to 5 day type swing trades. All right. All right. Speaking of SPX, it is the vehicle that I trade the most for sure. And so I like to give you a bigger perspective look at the overall S&P 500 cash settled market. We sat in a weekly demand zone that we created in September, and the bottom of that zone was right here, and we finally, guys, broke below it. And this week we closed below it. All right. So that zone that was created in September that gave us the demand zone gave us a bounce here and then we pulled back and it gave us a bounce to make new all-time highs, and then we have pulled back again into it. It gave us a bounce last week that we played to the upside. Small bounce this week, you could play to the upside, but it has now broken and closed below that weekly demand zone. That means for me, that weekly demand zone is no longer on my chart. Just like anything else, eventually zones break, guys. They do. You know why? Because the buy orders that we're setting down here, there's no more buyers. The sellers overpowered the buyers in this zone. People are so bearish right now, right? They're getting bearish towards the lows, which is very common, and it is why 95% of traders aren't profitable. But it's a reality in the market. So people are so bearish here that sellers overwhelmed the buyers. There's no more buyers to keep price up. And now we have broken below there. I simply remove that demand zone off my chart and I focus on the next lower demand zone. Hey, if you want to know how to find these supply and demand zones, I hope you're signed up for Trendy John and my class that we're actually teaching later today, because we are going to spend 4 to 5 hours teaching all about supply and demand. All right, but for all of you interested, the demand zone on the weekly chart below where price is at is 6,400 to 6,175. I am looking for buyers in this zone. If we get this pullback, this is the zone that I am hunting for longer term swing trades as well. All right, now let's look at the daily. Now we had a daily zone on here that was connected to that weekly zone, but we also broke below that daily zone and we have come into the next daily buy zone right here. So for this week, my buy zone for swing trades possibly and day trades, if we're in this zone, will be 65.03 to 63.84. Now, see the blue dotted line on my chart? That is the daily 200. Price is below the daily 200. That is on this daily chart a gauge that a lot of traders use to signify a bear market. Okay? That means any bounce that we play or I play from a demand zone, I treat as a relief bounce. A relief bounce means that at the 23.6 to the 38.2 Fibonacci levels, these are trim levels for me anytime I am long something in the market. That means if I give you a name here that says we are going long, let's say Southern. I actually started a position in Southern that's down about 15% right now. So I say we go long Southern, right? And let's say that I actually get my add to that position before it stops out. And we are long, or I'm long full allocation, and SPX is up here in this bear channel. That means I want to trim my southern position. Okay, that's what I mean. Also, of course, if I'm long SPX from this demand zone, I'm trimming at this bear channel. All right, so the 200 is resistance now, that's 66.21. The upper yearly edge, which is a playing field of supply on a big time frame, that is also resistance. We have now closed below the upper yearly edge here. Basically 1, 2, 3, 4, 5, 6 out of 7 days. This is resistance till proven otherwise when price is below an upper edge, I'm expecting sideways to down price action until price gets back above there. All right. All right, on the 4-hour chart for SPX, it's not going to look much different, guys. You're going to have the same areas of resistance. This is just a smaller zone on a 4-hour chart, 64.81 and a half by 64.43. That zone was created right there back in, let's see, September 5th, to be exact. All right. So, all that to say, yesterday's big pullback brought price into lower demand zones, and now we wait and see what Monday brings. All right, I went over the areas of the market that I am looking for potential swing trades, and a vast majority is going to be comprised of oil, energy, gas. I do have those some utility names on here. I have some semiconductor names on here. I have some consumer staple names on here because they were kind of one-offs for relative strength. Also communications sector. So that is what my watch list is made up of, a vast majority being the energy, oil, and gas. But I do not chase things at highs. Period. End of discussion for me. I wait for pullbacks. I did not get pullbacks in my energy or gas names last week, so no swing trades in those. I did get a pullback in the utilities name, and I went with SO for that utilities play. I got in a little too early, but I only went half allocation, and I have room to add to my position if Monday proves to be a bounce. I could get that confirmation and add to full allocation. All right, but I'm going to start alphabetically here. Broadcom is a name in the semiconductor space that really the semiconductors are just chopping. And Broadcom's coming down to the lower end of the chop. This is a daily demand zone from back here in September, and the zone that I am watching for a potential trade to the upside. Now, just like the overall market, it's below its daily 200. That means if I am trading this to the upside, wherever price is at in my demand zone, when I go long, I have to run some Fibonacci's and know that I'm trimming at the bear channel, okay? Or at that daily 200. For now, my plan is to watch this zone at 307 to 287. I don't know where my entry will be. I know that I have a lower monthly edge here at about the psychological value of 300, but anywhere in this zone waiting to buy, I'm going long. I will have a trim at that bear channel for now. I'm going to say 320 to 326. That's going to include that daily 200. Then above there, 337. And the supply zone, 343 to 362. ConocoPhillips is a name that I had on the list last week. We didn't get the pullback. Here's my alert, still waiting for that pullback that never came. You can see this thing has been up 1, 2, 3 days up, a little day of rest there, and then 1, 2, 3, and 4 straight days up. All right, so my buy zone now goes up to this demand, and I wait for price to pull back to 121.95 to 119.24. If I get a pullback, then I would look to go long in this zone, and I would be targeting 127 to 128. All right, CVX, here we go. Here again, did not get a pullback, so no trade in well, I can't say that. We are long CVX. from equity for over the last couple of years shared in the trendy room. So we are long CVX equity, but as far as an options swing trade, I did not get last week because there's the price action, no pullbacks or no pullbacks for me to buy down here. So my new zone 196.84 to 191.77, looking to trim at 204. Duke, this is a utilities name. It is one that yesterday on the big sell off came down into a daily demand zone where I was looking to enter a trade. I still like this name to the back to the upside, targeting 130 and 133 and a half, but I'm already in Southern, so no trade for me on Duke, but this is my buy zone if you are interested in trading Duke Energy back to the upside 130 and 133. GDX gold miners, this is a higher time frame demand zone. It is a new zone. I had a zone up here that we gapped down below. It saved me. Was looking for confirmation, never got it, so never went long in the buy zone. That saved me. My confirmation process gives me entries, but it also keeps me from buying a falling knife in this case. And that's what GDX was. I got no confirmation, so I never entered the trade to the upside. Now price has pulled back into this daily demand zone and right about at that daily 200. My buy zone GDX, again waiting for confirmation, 78.65 to 72.45. We are now below the upper yearly edge. That means that would be a trim for me at 85.18. I would be targeting this supply zone 90 to 98. Let's look at GLD itself on the daily. And let me give you the zone that I will be watching for. Again, a swing trade long gold. Here is the buy zone. Gold was the same way. I was looking to go long gold. I never got confirmation, so I did not go long gold last week on the buy zone. Thank you, confirmation process, for keeping me out of that trade. Now that price is coming back into this lower demand zone at 407 to 391, again, I will wait for confirmation. All right. I will wait for the confirmation. I will look to go long. I will trim at the bear channel, and then I will target the bearish golden profit area and the upper weekly edge 451 to 461. Intel, a semiconductor name that I am along with the trendy room equity from last year, I believe, maybe the year before, right at the end of the year. I can't remember exactly, but either 24 or 25, we got long equity down near $18. Uh, when Intel was trading at about $18. So we are in this for equity. Give me 1 second, guys. All right. Apologies there. But it is at the bottom of what has been chopped. It looks like a VGO. When I show you NVIDIA down here, it's going to look like that as well. This is my buy zone for NVIDIA. I've just had no reason to go long this zone, but with the NASDAQ and SPX or S&P 500 coming closer to those high time frame demand zones that I've been eyeballing for some swing trades, these names become more interesting to me. So here is Intel's buy zone. Trims would be at these trendy levels 47, 50, and 53. All right, let's look at Kinder Morgan. Buy zone right here at 32.70 to 31.67. This thing has really just been in a consolidation pattern for, golly, basically almost the entire month of March. I would be looking for upside targets of 33.72, 34.24, and 34.80 on this name. Altria, this is another one that confirmation process kept me from going long a buy zone, and I'm glad that I didn't, because we have come back into this daily demand zone, and I am interested in buying a dip here on Altria. This is a consumer staples name. It is a more defensive area of the market, 64.19 to 62.25. Then I would trim at this upper yearly edge, 66.5, 68.04, and targeting supply up here near 69.90, right where we got to the end of February. And you can see we've been selling off since we made it to supply. All right. NEE, this is a name that I wish I kind of would have waited on, because I love trading Nextera Energy, but I didn't. Southern came into its buy zone first, so I went with Southern. But Nextera, it has made it to the buy zone, 89.73 to 87.76. Trims are 93.38, 94.62, and 95.91. All right. And that's where I would be looking to trim a position from this buy zone. Now, understand, guys, if I'm going long in a demand zone, my stop is a daily candle close or a weekly candle close below the zone. If I get in on, say, a Friday, and I have bought out for a couple of months to expiration, I'm not going to stop out on the same day I get in. All right. I trade with an allocation amount that if it went to zero, I wouldn't wreck my account. I'm not putting, 40, 50% of my account at risk on one trade. I just don't do that. So if I get in a trade and that day the dip just keeps dipping, I only have a dollar of risk or $2 of risk, and we close just below my stop, I'm going to wait that out and wait until the next day and watch price action. If the price action continues falling, then I'll go ahead and stop out of the position. All right. Netflix is up next. Netflix is a name that I am currently in equity from 86, bought some at 86, bought some at 75, and now I am waiting and seeing what Netflix wants to do. The sell zone, if you're interested in shorting Netflix, is 94.31 to 96.34. This week, I would target about 91 and then 88.03 to 84.62. 88.03 to 84.62 represents an area that I would be looking to buy a dip on Netflix. Then I would play it back up to 94 to 96. All right. So there's a short idea or a long idea on Netflix, because this thing has been beat the heck up. Here's the daily 200. If that gives you any idea of where Netflix is in relationship to its daily 200, it's been below it for, I believe, a year. So that's where you could look to short Netflix. This is where I would go long Netflix. Okay. NVIDIA, I told you this thing's been chopping. Look, it's at the bottom of the chop. You see, ever since November, really, I mean, if we're being technical, ever since September back here, we've just been chopping in this range. It is at the bottom of the chop. If we get at least a relief bounce after a big week down in NASDAQ, then I would be looking to potentially trade NVIDIA to the upside from this demand zone and the lower end of this chop. If you run some Fibonacci's on this name and you're looking to trim a relief bounce, which I would be, I'm going to tell you that that's going to be right here between 178 and 180. So I have to count that as my first target when I'm figuring my risk to reward, looking for a better than a 1-for-1. I would prefer a 2-for-1 risk to reward here. That means that if I go long, let's say at 173, and my stop is 169.5, that means that I have about $4.50 of risk on this trade, right? And my first target needs to be better than a 1-for-1, and it would be about $5. So 3.5, is that 3.5? Yeah, 3.5 risk for 5 reward would fit my criteria. Then the next target for me would be up here near 182 to 185. All right. All right, let's talk about Occidental. Occidental is another name that I had on my watch list for a potential trade to the upside with no pullback, no trade this week. My new buy zone is 58.36 to 56.42, and then I'm looking to take profits at supply. Look at that touch and rejection so far, 61.35 to 64.76. All right. Raytheon had a pullback and it actually came down into a buy zone. I have not taken a trade on this name. This is a name that if the war was suddenly ceasefire, whatever, peace talks, all of that, this name's going to more than likely fall off a cliff. But for right now, it is in demand and a place that I could look to buy a dip. 198.31 to 192.62 would be that area that I'm watching for confirmation. Trimming at 203.33, then 208.5 by 214.5 for Raytheon. Shield is a ETF that you can take advantage of the political unrest potential to trade from a demand zone 73.24 to 71.32. This area in here is resistance. You have trendy edges. You also have a big imbalance candle down here from last or yesterday, 75 to 76.5. That's going to be an area to trim. And then, of course, playing it up into this supply zone, 77 to 78.5. And then finally, 81. Southern, I mentioned this one, and yesterday would technically have stopped me out, but I entered the trade way down here. Like I said, I've lost $50 a contract, I believe, on this trade. That $50 definitely not going to wreck my account, so I am still in the trade, and I will watch it on Monday to see if we close above the 93 type area. If we do, because this does not expire until May, you can see it right there, a $95 call for the May monthly expiration. Because this doesn't expire until May, I have plenty of time and I will watch for confirmation on the weekly candle to see if we can get back turned back up. And if we do, then I stay in. If we don't, I don't add to full allocation. I just take my loss and move on. If I stay in, if I add to full allocation in this trade, I am looking for 96.81, then 97.87 to 100.84. Okay? AT&T is another name that is on my watch list because of communications is a one-off showing a little bit of relative strength here, and AT&T is chopping. The bottom of the chop is here, 27.39 to 26.43. I would be trimming 28.47, 28.86, 29.79 there for AT&T. Target, another name. We actually filled the gap in Target. I was watching this for a potential trade from anywhere from 116 all the way down to 111. Thankfully, with confirmation, I did not go long this name, but it has filled the gap and it's made my risk much smaller, as in $2 rather than 4.75. So, that being said, if I'm looking to trade this zone, you have inside and down right here at about 116 and a half. That's a trim for me. You also have two upper trendy edges right here. So 116 and a half by 118 is a trim. Then trimming at 120.39 and 124.37. Up next is Verizon, the buy zone for me, 49.03, 47.83, targeting 51.18. Williams pulled back into this buy zone. It has been tested multiple times. It's kind of the bottom of this range it's been sitting at. I would wait for confirmation because this is so tested. So if you get confirmation, or if I get confirmation inside of this zone, I would be interested in buying a dip and playing this back up to 75-ish, then 76.42. 78.48 right there on Williams. Up next, consumer staples name Walmart. I am in equity on Walmart from um, last year, somewhere around the $86 mark here. Still in that equity, have taken trims up here near the highs. Great position. All right, this tested zone has failed. No confirmation to go long, so no trade for me. Walmart's next dip buy opportunity is actually down here near 113. But you could see a bounce off of this lower weekly edge right here, and probably on the 4-hour chart. If I went to the 4-hour chart, you're going to have candlestick structure right here between 119 and 115 and a half. I'm going to go ahead and zone that in case you're looking for a quicker trade in Walmart. Again, you have supply that was built up here at 124-ish. That would be a target. Then 127 to 129, and then 30, or finally 133. All right, those are some targets for Walmart, but I would look for this area to potentially be a great place for a bounce because of this imbalance candle right there. All right. Oops. That was not what I meant to do. This line is what I meant to do. So looking for a bounce inside of this zone right here, 4-hour demand. All right. All right. And last but not least would be ExxonMobil. Exxon, you have a new all-time high, obviously, here on Exxon. We never got the pullback I was looking for to go long on Exxon. But that being said, you can look to buy the pullback if we get it this week. Don't, I mean, you never say never, right? But somewhere around 151 to 147.86, this is a pullback I would still be looking for here. You could see a bounce at the lower weekly edge if we pull back to 155.74 to 154.71. But honestly, I'm going to hold out on Exxon for 151 to 147.86. I have some other energy names, oil and gas names, that I could get a play on. So Exxon is pretty extended right here. Okay, that would be my target zone. And then these, this area in here would be trims on the way up. All right, so that's my plan there for Exxon. I would trim a relief bounce if we do fall all the way down to here. I would be trimming this area of support on the way back up because I can just tell that that would be about near the 50 fib where I would trim a name like this. But it can also provide a shorter term type 2 to 5 day swing trade potentially if we get a pullback to the lower weekly edge. That's only about $1 risk there and about $2.50 reward up to first target. All right. All right, I got through all of that, and we actually still have 20 minutes until we are until the hour that I usually spend with y'all. So I'm going to look here in the chat at some questions, and if y'all have a name you would like me to go over and look for the supply and demand zones on, please put that in the chat here and I will take a look. Um, Doc, can you expand the list so we can see the symbols? This list here, does that help you? I'm not sure. Let's see. CC, for these, what next lower time frame will you look for our confirmation? Daily uses a 4 hour. CC, I'm not sure if you're in the class today, but we'll be going over that quite in detail today. So if you want to dive in deep with me, we'll go over it in the class today. But basically, there's some nuances there. I'm just going to say if it is a daily time frame, then I'm watching 1 to 2 hour candles. Okay, 1 to 2 hour candles. Awesome. Good morning to all of you that said good morning. Debbie, good to see you, my friend. Tell your husband, Stevie B, hello. Yeah, Cece, yep, you got an ugly topping wick on ExxonMobil yesterday. But let's be for real, right? I bet you a lot of things had ugly topping wicks yesterday. We really sold off on that triple witching monthly expiration, March expiration, which tends to be what happens in my experience on those March expirations. I'm not a big load the boat before March expirations to the upside type trader. All right. Digger, yeah, you want to look at Tesla, you bet. Let's look at Tesla from a top-down approach. Tesla, I am an equity holder of Tesla, and guys, I've been an equity holder of Tesla for a very long time. My husband owns a Tesla. I've invested in this company for a very long time. But let's look at the weekly chart on Tesla. I have not pulled this chart up in quite a while, but oh, look at that. Okay, we're going to start with the weekly chart. You can see I have Fibonacci's ran here from where we bottomed in April up to the most recent all-time highs, almost to that 500 psychological value. And then, nope, it said, no, I'm sorry, everybody that was playing that psychological value. I'm going to get you close, but I'm not going to get you there just yet. And I'm sure a lot of people lost a lot of money by that. and that sucks. And I'm sorry if that was you. But we have supply right here. Then we created a lower supply zone right in here at 445. So I'm just going to expand this supply zone 445 here on the weekly. All right. Then it looks like we created another one right here at about 407. That one I'm just going to leave normal. As far as these Fibonacci's go, we are solidly below the 38.2. So let me remove those just to clean up my chart some. And I want you to take a notice of this 50 fib right here, Digger. All right. The reason I want you to take notice of this halfback pullback is because this is what we call the golden profit area. But do you see this weekly candle that I'm highlighting right here? This is an imbalance candle. This represents an area that there could be institutional buy orders setting waiting to be filled. This area is an area that, oh, y'all are going to get to see Mowgli because she's just waking up. Hi, Moog. Good morning. Granny's working. I love you. You can sit right there, but you got to be quiet. Sorry, guys. That's my granddaughter. We call her Mowgli because she's wild, but her name is Brooklyn. All right. Anyway, this 50 fib, this is where I would really be paying attention to Tesla. Pull back into this area. Now, this is a weekly chart, so this is a trade that I would have to give it plenty of time, and I would be scaling in on this type of trade. Period, end of discussion, just because of the overall sentiment in the market. And I personally know that I have some levels I'm looking for the S&P 500 to potentially pull back to before I'm looking to really dive into going long and buying pullbacks on these big tech names. So, but 356.5 important level here on the weekly chart for Tesla. Now let's look at the daily. Again, that demand zone is broken, guys. Did it work? You might look at it and say, oh, look, your demand zone didn't work. It worked, fam. It worked. Here's where it was created. It pulled back and it made a new all-time high. Then it was tested again and it relief bounced. That's what it is. I'm talking about on all of these calls that I would be buying. I'm talking about trimming at a relief bounce. This is why, okay? When the sentiment has turned bearish on smaller time frames, if you go in long, you got to know where that bear channel is. And this is it. And that's what you got. You got a bounce on Tesla of about 40 to 50 bucks. Hopefully you took some profits there. All right. I do have no idea. I probably did this for someone else, but there it is. Then you pulled back again, you got another relief bounce, you pull back again, almost a relief bounce there, and now we flush below the demand zone. You're below the daily 200, as I would expect on this name and most of the big tech names with the market below the 200. All right, so on this daily chart, we definitely have lower areas of supply, and the most recent one is right here. All right, and I'm just going to use wow, it's the psychological 400 basically. 3 straight days down, big down days on Tesla. You see the blue dotted line below where Tesla's at? I bet you that's going to line up with that golden Fibonacci, or not golden, the 50 fib level that we talked about on the weekly. Yes, it does. Look at that. Okay, so this, remember, on the weekly is the area I would be looking to buy a dip. Let's go investigate this demand zone down here at 350. Here it is, inside and up. All right. This is demand. Then you have the bottom of this zone at 325. So basically about $25 wide zone. You know, if you trade Tesla, $25 is about two ATR, 2 days ATR. Not long. But I wouldn't ignore 356 because that's the 50 fib. All right. And then I'd be targeting basically 400 as the first target. Let's run our fibs so that I want you to see them. Remember, we're playing a relief bounce. So I'm going to run this to 356 right here. And I'm going to tell you anywhere from 390 to 410, that's my target. Anyone in here trades spreads to reduce your risk? Anyone trade spreads to reduce your risk? I do not, but I just want to point out, I know there are people in here that trade spreads to reduce your risk. I just want to point out the fact that I just gave you two zones, one to the upside, one to the downside, that I would be looking for sellers here and buyers here. All right. So I gave you, if you like to sell credit, I gave you a potential target if you're doing a put credit spread if you're down here at demand. Or let's say you like butterflies and you do a bullish butterfly up here at supply. Or let's say price gets a bounce up near 390 and you want to do a bearish play down to the demand zone. You can do that. Let's say you like trading iron condors or iron flies. Here is 25 wide and here's about 25 wide on both sides. You see how you can use supply and demand to trade straight up calls, straight up puts. You can also use it for your each side of your condors, or iron flies. And you can use them for butterflies, spreads, all of that. All right. But that's what I'm seeing for Tesla. Let me see. Google. Let's see. Google, you got it. Let's look at Google. We're going to do the same thing. I would like to look at the weekly chart. Okay, Google is holding up relatively well. I can just tell by looking at it, but let's see where we're at. All right, we got the bottom down here at 296. Wow, we are chopping on Google. Last week was a inside week on Google. So above 304.62, I would target 311, 327, and 349. Below 301, I would target 296, and then I'd look to buy a dip at 285 to 264. That's the levels on that weekly chart for Google. Right now, we're just chopping in this range right here. On the daily chart for Google, let's take a look. Remove. I'm going to remove all this. Still holding that line. Ooh, there's your resistance. You got an upper yearly edge. You definitely have supply right in here. Yeah, 308 to 313. That's a target to the upside. If you want to play this choppy range on Google, it's also where you could look to go short. I don't know if you're looking to go short, but I'm just telling you, if you want to play the top of the chop, that's it for Google. I personally, with something that is holding up this well compared, look, here's its daily 200, guys. There's better names that you can short in this market than Google. Okay. To go long, this is the zone. It's been tested. It's not a fresh zone, but it is a place you could look to go long. 296.5 to 286.5 right there. So here's your top of chop. Here's your bottom of chop. This is where I want to be a buyer. This is where I want to cover. And if you want to leave a runner for the upper supply zone at 321 to 332, you can do that as well. All right. We looked at NVIDIA, but we can look at her again. All right. NVIDIA has, let's look at the weekly chart since we did it for the other names. NVIDIA is at the bottom of chop. Here is a weekly demand zone, right? Here's the top of chop for NVIDIA, 190 to, let's just say, 200. Then on the daily, this is the zone that I would be a buyer in. I would play it as a relief bounce, trimming somewhere around 178 to 180, and then again at about 183 to 187, but finally targeting the top of the chop at 191 to 198. All right. Digger would like to look at the industrial sector, XLI. We can do that. This is definitely one. I don't know what the drawings would look like on it, but let's take a look. Oh, wow, that's old. All right, clear that. All right. And from a supply and demand perspective, right here is a nice imbalance on the weekly. You got inside and up, and I could, draw the zone this wide, but I'm going up to that imbalance candle right there. All right. And then the bottom of this, the low on this is going to be about 153. So here is your weekly demand zone where if I was wanting to trade the industrials where I would be a buyer on a weekly chart. So a trade that I was looking to be in for a couple to a few months. All right. All right. As far as supply goes, you got it right there, clear and simple. Very much so 3 weeks down in the industrials. This would be the target to the upside, okay, on this weekly chart. That is supply, so I color it red. There we go, and there we go. All right, on the daily chart on XLI, now this is a trade that I would be in for a couple weeks, couple months. There's your daily 200. Look for that to be support. Let's look down. Let's look to the left. Let's find the demand that is going to be right in this area here. You have inside and up right in here. That's lining up with that daily 200 and the upper yearly edge that I would look to be support here on the daily. So potentially about $5 more down. I do need to point out that you do have a zone right in here, inside and up as well. It's tested, but this could be a bounce because we tested it just yesterday and we don't know what's going to happen Monday when we wake up, right? Yesterday was the first test of this demand zone for industrials and a place you could look for a entry. If it does not hold, then this lower demand zone is where I would be a buyer below. All right. As far as supply goes, it's right here, inside and down, candlestick structure there. That is your first supply zone. I kind of like these, y'all asking me for names in the upcoming lives. If we have time like this, we can do this again. Okay? All right. Do y'all like the requests? Green eggs and cam. Do you trade based on 5 minute ATR? Not really. So my day trading, I love I love scalp trading. I actually SPX. But honestly, Cam, what I look for in my day trading is I'm looking to trade about 5 to 10 points. So I like using supply and demand, obviously, charts or zones based on 2 hour charts. So, like for next week or Monday, I would have a zone right here. This is going to be my first potential sell zone on SPX next week. It would look like this. And then what I do is if price comes into the zone, I wait for confirmation on a 3 minute chart. But I trade off of 5 minutes. And then the zone that I would look to take profits, right, is going to be right in here. Let's just make it this wide. This won't be my zone. For those of you in the SPX room, I'm just giving an example using yesterday's low. All right, so this would give me my two zones where I want to be a buyer and where I want to be a seller, Cam. And then I go down to a smaller time frame chart and I wait for confirmation when price is in this zone. I'm looking for a lower high and a break above the body, and that gives me an entry. And then what I do is I typically scalp 5 to 10 points. So I'm going to exit and move my stop to break even when SPX moves 5 to 10 and at a level. And then I either get break even stopped out or I make it to my target where I would exit. And that's the way I play it. Awesome. Yeah, thanks, Doc. All right, guys, that is my time today. I hope you found the content valuable. Again, if you haven't hit the like button, please do that. And if you're signed up for John and I's class today, I will see you in about 4 hours where we're going to spend 4 to 5 hours together learning all about supply and demand and how we trade it. All right. Y'all have an awesome Saturday and Sunday, and I look forward to seeing you in the rooms on Monday. If you're not a member of Simpler Trading, or if you're not in the Trendy or SPX room, you need to join us. Great community of traders, and I just think that we have the best supporting like-minded people that we hang out with every single day. Trading can be a very lonely profession. And so find you a community of traders that are like-minded and hang out with them during the day. All right. Y'all have a beautiful weekend, and I will see you in the next video.